Hey there traders, this is Steve Marty, the market chartist, and the week commencing the 21st of September 2020 with our regular weekly macro watch. Stocks looking vulnerable as European COVID-19 cases surge. So we're going to kick off with the macroeconomic and geopolitical developments in here over the past week. So first of all, let's start off with the Federal Reserve that we had on Wednesday. The FOMC highlighted their lower for longer theme, interest rates on hold until 2023. Asset purchases were not increased as the market was kind of potentially expecting maybe some extra give there, but economic projections were upgraded. In the UK, the Internal Markets Bill sees growing rebellion from Conservative backbenchers, and the government has then taken a slightly more conciliatory tone given that rebellion. The Bank of England on Thursday once more highlighted the potential for negative interest rates. And then we've had some modest improvement in the EU-UK trade talks with some minor progress made. However, throughout the week, and particularly towards the end of the week, European and UK COVID-19 cases have started to again surge higher. So that has led to increased lockdown measures in various European nations and in the UK. So let's have a look at the global financial markets developments over the past week, the week ending the 18th of September. Well, the Nasdaq continued its push lower. A weak close on Friday. Correction. Is it a correction still, or now a growing risk of a deeper reversal? The Nasdaq now 14% down from its high. The DAX dipped lower again on Friday, having rebounded Thursday from initial weakness, but still starts to look a little bit more vulnerable, having looked fairly positive throughout September, now looking a little bit more vulnerable, as do most of the European equity indices. However, in the Forex space, in the FX area, currencies still indicating more of a risk-on theme. So we've had a decent rebound over the past week in the Australian dollar, and this has really reflected or echoed the broader weakness we've seen in the US dollar. And US dollar weakness has pretty much been in line with a risk-on theme, but obviously we've seen a little bit of vulnerability on equities, but we're seeing the US dollar certainly starting to weaken again in here. So Australian dollar higher against the US dollar, so these risk currencies, Aussie up against the US dollar in the past week, a more positive tone. Really, the typified in it by the New Zealand dollar, which surged higher throughout the week and spiked up to a new multi-month high with a bullish extension above the September peak. So again, reflecting risk-on phase, New Zealand dollar, Australian dollar higher, but also that risk-on phase reinforced by the US dollar weakening against most currencies throughout the week. Here again, we see dollar China pushing lower, so a weakness in the dollar versus Chinese currency, and also a weakness in the dollar versus the Japanese yen. And the pound though stays weak against the dollar, even though the dollar is a weak currency right now, starting to re-weaken. The big sell-offs we saw in the pound on the back of both the EU-UK trade talks not going well, and also this whole internal markets bill that saw the pound weaken throughout the first part of September. Yes, we had a rebound on dollar weakness earlier in the past week, but that weakness, that pound weakness coming back through in here over the past, into the very end of the week on Friday. The euro dipped again and rebounded again from support around the 117 area, from ahead of that support around 117, rejecting a more negative tone and maintaining in what is still a range environment more of a positive bias. And turning our attention to the commodity markets, we now look at crude. Crude's had a decent rebound in here with the Gulf of Mexico reopening or starting to reopen after recent hurricanes. So the downside pressures that we previously saw on the oil price, we're now seeing a decent rebound in oil. And COMEX copper in here pushing to yet another new multi-month high this week in here. Really strong end to the week on Friday. Again, showing kind of more of a risk-on theme that we're getting in here from the FX markets, but obviously with negative pressures coming through from US stocks, particularly from the tech-laden Nasdaq. So now let's take a look at the week ahead, week commencing the 21st of September 2020. Well, on Monday and Tuesday, we have holidays in Japan. Markets are closed. If we look at see what's going on the central bank side, Wednesday we get the Reserve Bank of New Zealand, the RBNZ interest rate decision and statement, and then on Thursday the Bank of Japan meeting minutes from their previous meeting. There are a load of speakers in here, central bank speakers throughout the week, but the real standout is going to be Jerome Powell. He does speak early in the week, Monday, and then we also get, though, him testifying to Congress on both Wednesday and Thursday. So let's take a look at the whole week ahead. So we've got that Japanese holiday on Monday and Tuesday. Markets closed. Jerome Powell is speaking on Monday, and we also have other FOMC members, Brainard and Williams, speaking. We get that other holiday, the autumnal equinox holiday in Japan on Tuesday. RBA Assistant Governor DeBell speaks alongside the Bank of England Governor Bailey, both on Tuesday. Wednesday brings that RBNZ interest rate decision and statement. We get the global market flash manufacturing and service sector PMI data. That's going to be the main focus of the week, really, on the data front. And we get then Powell testifying to Congress, and also FOMC members Mester and Quales speaking on Wednesday. We get those Bank of Japan monetary policy meeting minutes through on Thursday, the German IFO business climate, and then also Jerome Powell again in front of Congress on Thursday. The weekly US jobless claims number, and Bank of England Governor Bailey speaking again, with also Williams speaking again Thursday. Williams again speaking on Friday, alongside we get those US durable goods orders data. That's going to be it for me for now. Please join me again soon for another macro watch. Until then, have a great trading week. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.